$85 million. That is the size of the seed funding round backing Sentient, making it the largest venture capital bet in crypto AI history. That initial capital injection immediately valued the project at $1.2 billion, driven by institutional heavyweights like Founders Fund and Pantera. The core innovation that secured this Tier 1 capital is a system called OML, or Open Monetizable Loyal. It is an academic-grade cryptographic protocol designed to solve the problem of AI model ownership. However, there is a stark contrast between Sentient's elite pedigree and its operational reality. Right now, every meaningful utility and economic driver for the protocol is entirely gated behind a mainnet that has not yet shipped. Because the project is pre-revenue, its public market valuation has slipped below that initial $1.2 billion seed price, and approaching rapidly in November 2026 is a massive unlock cliff for early venture investors. Sentient is locked in a high-stakes race. The team must ship foundational, decentralized inference infrastructure and prove its economic model before brutal venture capital liquidity pressures force the market's hand. To understand the protocol, we have to look at the intellectual bedrock of its founders. Co-founder Pramod Viswanathan is an engineering professor at Princeton and co-invented the technology underlying 4G mobile networks. The rest of the founding team blends high-level academia with deep crypto infrastructure. Himanshu Tyagi is a professor at the Indian Institute of Science, specializing in decentralized algorithms, joined by Polygon co-founder Sandeep Nailwal and Symbolic Capital's Kenzie Wang. Together, their stated mission is to build community-owned AGI, which they are attempting to execute through 3 distinct product layers. Layer 1 is OML fingerprinting. This is the base layer for cryptographic model ownership, and it operates precisely as documented in their peer-reviewed paper published at ePrint 2024. Layer 2 is ROMA, the recursive open meta-agent framework. This allows individual AI agents to call upon other agents in complex, structured hierarchies to complete tasks. Layer 3 is the grid. This is the open-source execution network where these agents operate, but it currently exists exclusively in a testnet environment. To power this economy, the team launched the Sent token in November 2025 via a Binance Wallet initial exchange offering, pricing the token at just over 1 cent. Without a mechanism to enforce compensation, open-source AI developers struggle to monetize their work. By combining peer-reviewed cryptography with a native token, Sentient replaces traditional, unenforceable legal contracts with hard-coded, verifiable mathematics. The market clearly saw the value in this mathematical approach. 23 institutional investors participated in Sentient's seed round, providing immense validation. The Sent token is capped at a maximum supply of exactly 34,359,738,368 tokens, a precise nod to computer science, as that number is exactly 2 to the power of 35. This breaks down the Sent allocation: 44% community, 19.55% ecosystem, and 2% public. That's 65.55% community-facing, leaving 22% team and 12.45% investors. The founders locked into a 6-year vesting schedule, the longest currently active in decentralized AI. Despite generating no revenue, the token has secured exceptional Tier 1 liquidity, trading actively across major Western exchanges, including Binance, Coinbase, and Kraken. A mathematically capped supply, a community-weighted distribution, and a 6-year lockup embed founder alignment directly into the protocol's architecture. Moving past the financial metrics, we need to examine what Sentient has actually shipped in terms of raw cryptographic code. During fine-tuning, undetectable cryptographic query and response pairs are injected into a language model, creating a permanent, hidden watermark. If someone copies your model, you cryptographically prove ownership. If used on the network, smart contracts automatically detect the fingerprint and route per-invocation fees to your wallet. The OML fingerprinting system is a peer-reviewed cryptographic standard, verifiable through published academic research. The Sentient team has already proven this works in the wild. The Dobby model family on Hugging Face consists of explicitly uncensored fine-tunes that utilize this exact cryptographic framework. There is also tangible market demand for the infrastructure. The Sentient chat interface has accumulated a substantial waitlist and successfully processed user queries during testnet operations. OML successfully solves the foundational problem of data sovereignty for model creators. The technology operates exactly as designed, and the cryptography is mathematically sound. But here we hit the critical execution choke point. Every piece of working technology is entirely dependent on the grid mainnet. Staking mechanisms, per-invocation fee distributions, model access controls, and network governance are all completely frozen until that mainnet goes live. That creates a stark financial reality. Sentient holds a $1.2 billion private valuation, but the protocol currently generates absolute zero in on-chain revenue. There are also glaring transparency gaps. The project has not published a smart contract audit, and the Sent token contract currently remains unverified on Etherscan. This timeline maps the greatest vulnerability. In November 2026, 34.45. Because the public token price has dropped below the $1.2 billion seed valuation, early investors have a strict mathematical incentive to aggressively sell at unlock. Until the grid mainnet ships, and until the team proves they can convert a free waitlist into paying users, the entire protocol remains theoretically profound but operationally hollow. To grade Sentient objectively, we have to weigh the brilliance of its cryptography against the severe risks of its unshipped infrastructure. For freedom, Sentient scores a 49 out of 100, a grade D. OML fingerprinting is a genuine breakthrough for model creator sovereignty, but the actual network infrastructure currently runs centralized on existing Layer 2 chains and team-controlled servers. For returns, the project scores a 50 out of 100, another grade D. The token enjoys Tier 1 exchange liquidity, but the complete lack of protocol revenue and the looming 2026 supply cliff severely punish the score. Plotting this on our evaluation matrix places Sentient exactly on the border between a sovereignty play and a high-risk, low-return asset. Sentient operates in a state of extreme duality. It holds world-class academic cryptography in one hand and zero revenue with an unshipped mainnet in the other. Holding the Sent token today is essentially holding a governance waitlist ticket while staring down material incoming dilution. This analysis is provided by Own Your Mind at ownyourmind.ai, an independent and unsponsored research platform.